Okay, thank you all for coming. This is an intimate crowd, so feel free to stop me if you have questions during the presentation. I'm glad to have some back and forth. A little bit about myself. I'm the co-founder and CTO of HYPR. We are a cybersecurity company based here in New York City. I'll have a little bit more about that later. But I come from a security background, and I've been living here in New York City for about 5 years, doing the company for about 3 years. So one of the cool things that we got to do this year, we got to be a Gartner Cool vendor. We've got about $14 million in venture capital funding from various firms. And we got about 20 million users using our product today. We're going to try to get that to 100 million next year and 1 billion by 2021. So that's the goal. And these are some of the companies that we work with. The reason I'm here today is to talk to you about the fact that we live in a mostly untrusted world. So when you go to your bank account and you put in your username and password, your bank kind of trusts that, but they don't really, which is why they have to have fraud protection and all this other stuff. But that's mostly due to the fact that we have a password problem. So 81% of data breaches, like the Equifax one that happened the other day, is due to stolen credentials. So people guessing people's passwords, phishing them, doing other things to get them, reading them off your monitor when you put a sticky note on it, etc. And 24% of these are just at banks, just targeted at banks because that's where the money is. And as more and more people get bank accounts, right now I think like 2.5 billion people who could have a bank account don't. As more and more banks continue to spread throughout the world, these things are going to start happening more and more. Passwords are clumsy, they're hard to remember. I think the password to arm and disarm nuclear missiles for the US government was just 7 zeros for like 20 years. So they changed it. So just last year, 3 billion username and passwords have been stolen. You can see some of the logos here. And last year when Yahoo got hacked, we actually saw what kind of monetary effect that has on a big company. So before Yahoo got acquired, they had a certain amount of money negotiated for the company, and then they got hacked, and basically overnight, that amount went down by $350 million. We've tried to come up with creative solutions to passwords to make them more secure, using things like one-time passcodes. So when you log into a bank account, you get a text message you have to punch in, or you have like a hard token that your bank gives you, typically if you have a lot of money with that bank, to protect yourself. And these things are confusing, and they're still not perfect. So I've been places where they'll share a single phone at a company, and then they'll just use it to get that code. And then everybody has access to it, which doesn't really do anything for accountability. So the fact is that we need a new model. And the new model, if you've been paying attention over the last few years, or particularly a couple days ago with the new iPhone that's coming out, is biometrics. So a few years ago, Apple put a fingerprint reader on an iPhone, and that was really awesome. And that was like right before we started our company, and we said, hey, you know, if Apple's doing this, everybody's going to do it eventually. And if everybody's going to do it eventually, companies are going to start trying to figure out how to do this, not only for iPhones, but all the phones that their consumers have. So billions and billions of people. So we decided, hey, we build a technology to make that easy for them. So biometrics, they're evolving. There are Samsung phones that have face recognition, eye recognition, different types of biometrics. iPhone is coming out with face recognition now. And biometrics are not anything new, by the way. They've been used for 20, 30, 40 years by the government. So sometimes if you go through the airport, they'll ask for biometrics, etc. But they can be really risky. One good thing about passwords over biometrics is the fact that you can change your password whenever you want, but you can't change your biometric. So if I steal your fingerprint or your face data, I can recreate that and act as you, and you can't change it, at least not that easily. So the prime kind of example of that is the Office of Personnel Management of the US government. They had about 22 million government employees' biometric data, and they got hacked, and they lost all of it. And the problem with that was because they had it all in one place. And that's the problem with PINs, passwords, biometrics. Traditionally, the way they've been used is they've been in one place. So when LinkedIn or Yahoo gets hacked, all that information is in the same place. And if you're a hacker, you know exactly where to go. So if I want to break into Microsoft or whatever company like Equifax, probably have a central database with everybody's passwords in it, and that's where I'm going to put in all my effort to go after. So now if you're a company and you know that it's a real possibility for everybody's accounts to be stolen that way because you have it in a central place, that means you can't really trust everyone. And what we do is we tell our customers, if you use this new way of doing things, you should be able to trust everyone, or at least trust every single one of your users, because if you are using a decentralized technology, which I'll talk about the rest of the presentation, you will be able to definitively know that your customer is who they say they are when they come to you and try to do something. Because chances are they will not be using a password, they'll be using some other type of mechanism. So what we do as a company and what the trend is in terms of security for authentication and access to things is the decentralized approach. So companies will no longer have a central storage or central database of people's credentials, whether they're passwords or biometrics or whatever else. And this will basically force a hacker to go from device to device to device instead of a central place where everybody's information is. So what this does, and you don't have to read the text on the screen here because it's small and probably not interesting unless you're really in this field. But this is based off of public key cryptography. That concept is what is powering things like digital currencies, like Bitcoin, et cetera. Public key cryptography is really big in that concept. All of the keys for individuals stay on their personal devices. And when your keys stay on your personal devices, that means that a hacker has to go from individual to hack them, which means they can no longer have this situation where they break into millions of accounts at once. And when you put that barrier there for the hackers, they'll probably try to find some other way to gain access to money and resources. So what this also does besides just the security component of it is it increases usability a lot. So one of our customers is a health insurance company, and what they do is every single year when you have to re-enroll into your health insurance, you have to log in, and you do this only once a year. So what happens there is once a year they have a password apocalypse where millions and millions of people every single year forget their password. And many of them, millions of them, call up the call center and they ask to have their password reset. So in terms of usability, when you don't have a password type system, when you're using biometrics with fingerprint or face recognition or voice recognition, whatever it is, you don't have to remember a password. You just provide your biometric and you can access whatever you need. It also protects your privacy, and obviously it's way more secure because of the previous reasons I mentioned. So now I'm going to take some time to talk about specific use cases that we are involved in and maybe get some ideas from you as well. Any questions so far? Cool. So ATMs. Right now, what's your experience when you go to an ATM? You walk to the bank or to the ATM machine on the corner. You put in your card that you have to have on you, first of all. You put in your PIN, and then you go through the process of choosing the amount of money and all that stuff. It takes about maybe a few minutes to do, right, if you have your card on you. The new way that we are working with companies to do ATMs is you would do everything on your phone ahead of time. So you would choose, you would log into your bank account application on your mobile device. You would choose how much money you want, and then you would choose from which account, etc. And then you can walk to any ATM, and you can just tap your phone on it. And as soon as you do that, it will ask you to verify your biometric on your phone, usually face recognition. And then once you do that, the ATM just gives you your money. You don't have to have a card. You don't have to remember a PIN, none of that stuff. Another use case is cars. So car companies have a big problem right now because things like Uber and Lyft are becoming really popular. So right now when Toyota sells a Camry to the average person, they make maybe $1,000 on that car after all their costs and everything. And then Uber buys 500 Toyota Camrys, a lot. And every single time they do this, they spend $20,000 on the car. And then over the lifetime of that car, they probably make like $5 million off of it because of the revenue they're able to generate after the fact. So car companies are like, wait, we're making this thing. We're shipping it to these various countries. We're putting it into the dealerships, and then we're getting $1,000 for the lifetime of that car. It doesn't really make much sense. So what they want to do is improve the digital experience inside the car itself, and then find ways to monetize the car after the point of sale. And they want to also improve the digital experience to increase loyalty within their brand. So right now, what keeps you loyal to your car, it's probably like the gas mileage and how it looks maybe. And then if you find something nicer that might be a little bit cheaper to maintain, you could go straight to that, even if it's a different brand. What car companies are doing is they're using biometrics to make the user experience better overall. So one car company that we're working with, they're using biometrics that do gait recognition. And what that is, it recognizes you by how you walk with your phone in your pocket. So as you approach your car will unlock when you're right next to it. And then when you sit down, they're actually putting a camera inside the car to scan your face to engage the transmission itself. And then when you go across a bridge to pay a toll, or you go through a drive-through to buy food, the car will make the payment for you because it already knows who you are. So all of these things are what they're hoping to charge as an add-on service to the car after you buy it, as well as to increase loyalty. And then the obvious choice is passwordless banking. Passwords are dangerous and they're easy to hack and they're easy to guess and they are costly to replace. So banks want to increase the speed at which you can pay for something because the easier it is to pay for things, the more likely you are to spend money. So if they can make it easy for you to send money to friends when you're at a bar, when you're paying for drinks, or easier to generally do things within your app. One really good example of that actually is if you open up your banking app right now and you look at what you can do in that app, there's several things you can't do. So like change your physical address in your bank app. You can't do that. Change your email in your bank app. You can't do that. You have to either call or go to the bank to do these things. And that's because they can't trust the fact that you are who you say you are when you access the bank through that app. And if they can use things like biometrics to definitively know that, they can save a ton of money so that those millions of people every year that change their address, that have to physically go to a bank to do that, that takes time from tellers and other bank personnel, that's a ton of money that the bank themselves could save. So, any questions? Anything at all? All right.